to smile. For a change, let's start with a smile on your face.
Good morning,
Smile on
Nikunj.
your face. Do you think the smile is going to last long? Because crude is down, but US markets are also down. There you go. The smile goes automatically.
Nikunj, I think stability in the markets would come. Nikunj, I think for stability in the markets, we need to see some of the macro stabilizing. We have seen first set of reversal on crude, which has also given some stability to currency. And 10-year yields in our market have also kind of gone down. So all these point to some sort of stability, but it's too early to say whether this is going to become a durable bottom for the market or not.
So, Harsha, progressively, where do you think earnings are headed? The first evidence of what we've got is that TCS numbers were good, persistent numbers were not great. HUL came out with good set of numbers, small FMCG companies are struggling. Small NBFCs are feeling the heat of liquidity, Bajaj Finance, no problem whatsoever. Are markets telling you a message that mid and small cap stocks will go through a grind of pain because of liquidity and high interest rates, and disproportionate market share will now rest with large cap companies across categories?
That's very much possible, at least in the short term, Nikunj. Whenever the macro headwinds start affecting the overall corporate profitability and growth, usually the mid and small cap companies suffer the most. While in the September quarter results, we may not see that entirely playing out, because we saw some of these macro headwinds worsening only towards the end. And if somebody had hedged some of their raw materials or other costs, you won't see that impact immediately. But what will be crucial would be the December quarter results, where I think there is going to be a difference between how some of the stronger players will be able to navigate this environment, and some of the smaller players may see a larger headwinds. And that goes true for even NBFC segment. I think clearly the cost of funding has gone up, the liquidity has dried up. Only the players who have ability to raise money and who have the ability to price their loans and grow in this market with taking risk into account will be the ones which will get better valuation. Others may suffer.
Harsha, morning firstly, but the big quandary this morning is, what do you track? Do you track what crude is doing, the fact that it's cooled off so much, or do you take away from the global cues and that massive correction which has played out overnight? Irrespective of the market reacting to the crude cool off today and us seeing this gap up move, do you sense that sooner or later we will start tracking global cues and thereby aggravate the fall from these levels? Or do you sense that maybe this time we could be a little disconnected because we've already fallen so much?
Aisha, it's always difficult to say how we will perform in the shorter term, whether it will be correlated with global markets on a daily basis or not. It's very difficult to predict. But clearly, last 6 or 8 weeks, the headwinds that we saw were mainly arising from higher crude prices, volatility in currency, and also depreciating bias that our currency had against US dollar, and firming up of 10-year yields on our market. Along with that, we also had credit default at IL&FS. Out of these 4 issues, I think 3 seem to be kind of stabilizing. It's too early to call that we have already seen the worst of all of these events, but seems like there seems to be some stability coming back. And now if we see the credit market in India normalizing over a period of time, maybe, who knows, markets can stabilize at these levels. Otherwise, there could be some more pain in the market.
Let's talk about the litmus test, as we're calling it here, earnings season. And we were just chatting about it in this this morning pre-market, that this is that one quarter wherein you've seen that separation from men to boys really take place. While Mindtree, Hexaber, etc. may not have delivered, or Persistent actually for that matter, but there is that TCS, there is that Infosys, which have always been the go-to names, and they continue to rise and shine even in this environment. And that's exactly spelled out by Bajaj Finance as well yesterday. They continue to stick by with their guidance. They're extremely confident. AUM's crossing that 1 lakh crore rupee mark, irrespective of the environment surrounding them and the liquidity concerns. Do you believe that whenever the market does rebound, it'll always be this flight to quality, these supreme leaders within each sector, which will again come back?
What we believe is it has to be a combination of some of the quality names in the portfolio, which may still be trading at higher valuations compared to the market. And also we need to keep a watch on the basket, which has really fallen in the last several weeks, and where the valuations have started to become attractive. It's not a complete sector which has become attractive, but in each and every sector there are a couple of names which have become attractive. So we need to keep a watch on both of these baskets to build the portfolio. I don't think it will be one versus the other.